Chokhalingam, the founder and MD of Equinomics Research, who's joining in on the program with us. Warm welcome. Good afternoon to you, Mr. Chokhalingam. Help us understand with your fresh view in the markets, how are you assessing this constant attempt by the bulls to come back above 25,000, 25,100, 200 or sorts? Do you think there is renewed optimism in the markets, and by Diwali, this festive season, we could yet again make an attempt to go back to our erstwhile all-time highs on the markets too?
There would be a periodic upturn, but I doubt whether that would be sustained. I have been perennially optimistic and bullish on this market for more than 10 years in a row, except last September. But once again, I am a little nervous, not because of US tariff war. I completely agree with the finance minister statement that the domestic story is so strong, we can overcome. Yes, it will give a pain, no doubt at all, for the economy and market, but we can overcome. My concern is more on the liquidity front. The promoters have sold the shares in the last 1 year. The FIs have sold the shares in more than 3 lakh crore worth in the last 2-3 years. And the IPOs have checked out, close to 1 lakh crore in the current calendar year. So the liquidity is getting, drained out of the secondary market. And that is going to cause a lot of volatility with the downward bias till end of the current calendar year, till December. So another 3 months, I feel we will have a lot of volatility with the downturn. Yes, periodic there will be upturn, and that is not likely to be sustained. So only when the IPO boom burst out, and it takes a modest position in the sense, not every issue is getting oversubscribed, and not every issue is getting phenomenal oversubscription. Unless such thing happens, this is going to have volatility with the downward bias. So therefore, the valuation of individual stock is the most important at this juncture.
Valuation is the most important point to keep in mind. But pharma stocks are back in action, and let's keep an eye out on what is really moving the healthcare sector higher. Pharma stocks on a strong footing today. This is after reports are suggesting that Donald Trump administration is considering shelving of tariffs on generic drugs. Let's just find out how much relief could this bring to the Indian pharma companies. I'm now joined by my colleague Neetu Chandra Sharma for more on this. Neetu, we do know that the last time around there was news on tariffs on the pharma space in India, all the exporters of branded and patented drugs. There was a sharp knee-jerk reaction on the stocks back home. Today, they are seeing all across the board 1 to 5% odd kind of a move on the higher side on the pharma-related stocks. Is this a big news that's coming in as a big relief for the Indian pharma companies?
Yes, actually, so there is now more clarity on this issue. So now the Trump administration's decision to spare generic drugs from import tariffs, it's a huge relief for both American patients as well as the Indian pharmaceutical industry, which supplies nearly 40% of the generics to the US market. So now if had tariffs been imposed, it could have disrupted supplies and raised drug prices and hit India's $25 billion export market hard. So this exemption essentially protects India's role as a pharmacy of the world, while ensuring affordability in the US. So however, if you look at this move, this also shows that the US wants to reduce the long-term dependence on foreign manufacturing for critical drugs. Now, I've spoken to many analysts in the sector. What they have said that after this move, Indian pharma will need to invest in quality, innovation, and partnerships to stay ahead in the US market after this move. Yeah, back to you, Sakshi.
Thanks a lot, Neetu, for all that update. Coming back to Mr. Chokhalingam, how do you see, Mr. Chokhalingam, this move for the Indian pharma companies? Now, we do know, even at the time of the announcement of a 100% tariff on some of the pharma exports that Mr. Donald Trump had announced, especially for the branded and the patented drugs, we were trying to assess how much of an impact could there be. There were names like Sun Pharma could be impacted because they have a branded formulations portfolio that exports to the US as well. But a large part of Indian pharma companies actually export generics. And the big question was that after branded and after patented drugs, will generics also come under the fold of tariffs? Today, that clarification has come in. And the Trump administration is saying that generics will stay out of it. Big coverage and big news for the Indian pharma space. How would you look at it?
I would still have a little cautious approach because Mr. Trump, very clear in his mind that even on the domestic front, he has already warned US pharma companies on the high profit margin. So definitely it is not going to be aggressive 50% or 100% for Indian pharmaceutical exports. I'm pretty confident on that. Same way, it is not going to be, zero or in single digit duty. It is going to be somewhere in between, the duty, and also there will be a lot of pressure on the price front, not only for American companies, even on exporting countries. So therefore, I would still advise a little cautious approach, particularly on exporters, and therefore I would suggest focus more on domestic demand-driven domestic formulators.
Fair
In the
point. Fair point. So you are saying that, it's better at this point in time to still stay cautious on the export-oriented sectors, focus more on the domestic themes. I'll talk about one more export-oriented sector, and that's IT. That has been in momentum over the last couple of sessions. Today is when the focus starts on the Q2 earnings. TCS, Tata Elxsi start off and kickstart this Q2 earnings season for the IT industry at large as well. As far as TCS is concerned, remember, viewers, this is the largest Indian software exporter company that we are talking about, the largest listed company with market capitalization in the Indian stock markets, and therefore a result coming in from TCS will also have an impact on the entire sector as well this time around, because of reasons that the TCS results are coinciding with Mr. Ratan Tata's death anniversary. The customary press conference has been cancelled, but what we are still hoping to see is the commentary, especially on the client spends, on the economic growth outlook, and the deal pipeline as well, also the wage structure going forward from here. Mr. Chokhalingam, to you on TCS, what's your big expectation for the Q2 earnings? And on the overall IT sector, what's your approach?
It is very easy to make a judgment on IT sector for any analyst, I believe, firmly, because things are very clear. The last 2-3 years, they have been growing in a poor single digit in dollar revenue exports. And there is no optimism on that. That is not going to change at all. But added to that, you have a problem of H-1B visa issue, which is going to be marginally negative. And then there is also fear of any possible tax on IT service exports. And therefore, the expectation is that the single digit growth syndrome, which we are seeing in terms of dollar revenue exports, is going to continue in the short to medium term. So even the rupee depreciation in the last 3-5 years has not helped the Indian IT companies to improve the margin substantially. It seems the customers have become very smart. They are also part of the beneficiary of this falling rupee over the last 3-4 years. So I would say that at best it would be defensive, or it can make a trading profit. But the wealth creation story is over, at least for next 1 to 2 years. That's my focus. One should focus more on small, mid-sized quality companies within the IT sector, because once again, I expect merger and acquisition to get a momentum like what we saw in 14 to 19.